Is South Carolina a tax deed state? Well, welcome back. Now, in this episode, I'm going to answer the question, is South Carolina a tax deed state? Well, folks, I've been at this for quite some time. Okay, so the last 30 years I've been involved in tax lien certificates and tax defaulted property. And before that, I was an investor in regular real estate, in foreclosure real estate and so on. I started out with single family homes that I kind of grew to doing apartment properties, sometimes 50 units and more, and I ended up doing office buildings. So I had a lot of experience in real estate, but when I found out about tax lien certificates and the profits I could make, well, that changed the whole ball game for me. All right, now every one of the states that we're going to talk about with tax liens or tax deeds has their own rules. So generally speaking, about half of the states will sell tax lien certificates and the other half of the states will sell tax deeds. So today we're going to talk about, is South Carolina a tax deed state? Now, it isn't a tax deed state. It's a tax lien state. All right, now it's much different than the states that surround it. For example, South Carolina, on the south of it, is the state of Georgia. Now, Georgia is a redeemable deed state, altogether different. On the north of the South Carolina is North Carolina, and that's also a deed state. Not a redeemable, but a deed state. So they're going to be much different. So no matter which state you're going to go to, you need to figure out, is it a tax lien or a tax deed state? And not to worry, the county's going to tell you that right away. But there's a world of difference between states, and there's a world of difference between the rules. So is South Carolina a tax deed state? No, it's a tax lien state, and that means they're going to sell a lien to the property, which they're going to charge interest on. Now, I'll be right back and give you all those details. Okay, so what am I covering today? Is South Carolina a tax lien state? And the answer is absolutely yes. They're going to pay up to 12% interest in the state. Now, most people know that it's a tax lien state, so they're going to go there. They're not expecting to get a property, because when you raise your hand or you bid, what you're really doing is you're bidding, and you're going to end up with a certificate. You're not going to end up with a property. So in the tax lien states, the property owner stays on the property for the full redemption period. The property owner stays there. For me, I call that a benevolent state. In other words, when the legislature enacted the law, they said, all right, the property owner gets to stay there. All right, now everybody benefits in this business. Now, what do I mean by that? First of all, the county benefits if you buy a certificate because they get paid. Now they can pay their bills. I'll come back to that. Okay, the property owner benefits because they get to stay in the property. And then you're going to benefit, truly benefit, to the tune of 12% interest if the property owner pays. So this thing really works, okay? But there's a world of difference between these states. Now, I know you could easily be confused. And so try to narrow your thought process down. Am I buying in a tax deed state, or am I buying a tax lien state? Here in South Carolina, we're talking about a tax lien state. Now, the United States has round numbers 3,000 counties. And those counties, depending upon what law the state has enacted, will either be tax liens or tax deeds. It will be the same thing with the 1,400 municipalities. What I'm telling you is, this is a world of abundance. There's going to be too much of everything. All right, now I don't make the rules. The legislature makes the rules. They make all the laws. I don't have anything to do with that. And in this case, what they've done is they've created a law that says they're going to collect property taxes by issuing a tax lien certificate in South Carolina. North Carolina is different. Georgia's different. Texas is different. Everybody's going to do it the way they want to do it. Now, the beauty of this business is everybody is allowed to own property. But if you own a property, what you have to do is you have to pay taxes. Now, what do they do with all that money for taxes? Well, I can tell you. The county's got a lot to do with that money. First of all, they have to pay the firefighters. They have to pay the police department. They're going to have to pay the school teachers. They're going to have to pay the county's bills. All right, so all of those bills they'll probably have maybe 100 different bills to pay, to fix the roads, to pay the sheriff, all those things. All right, where are they getting the money from? The money comes from the property owners. So if the property owners don't pay the tax, the county has two alternatives. One alternative, sell a tax lien certificate. That depends upon the state. So South Carolina sells tax lien certificates. North Carolina, they sell tax deeds. So what's going on here? Well, what's going on is the treasurer has power. And the power the treasurer has, if you don't pay the tax and you live in South Carolina, then they're going to remove you from the property ultimately, but they're going to start out by selling a tax lien certificate. So I call that kind of state a benevolent state. They don't kick the property owner out, but you as the buyer do not get possession. Now write that down. You don't get possession when you buy a tax lien in the state of South Carolina. All right, so what actually happened, the treasurer issued a notice of default. Now that notice of default starts the clock going, creates the tax lien certificate. The owner's on notice from this default notice, and they'll now know the consequences, that if they don't pay, they don't come in and pay their tax, the tax certificate will be sold, and if they never pay the tax, they'll lose the property. They'll forfeit the property to a new buyer. All right, now this process works. It benefits everyone. Benefits the county, they get paid. Benefits you because you're going to get paid. And it benefits the property owner because they're going to stay in that property. Maybe they're getting over sickness. Maybe they had a crisis in their life. I don't know. Maybe they lost a job. It gives them a whole year to get their taxes paid. Once they pay the tax, then they're not going to lose the property. All right, so I call those benevolent states that sell tax lien certificates. Now, I don't know how the legislature is going to work, but they make all the rules. I don't make them. They push the rules down to the county, and either the Board of Supervisors or the county commissioner will direct the treasurer to do things. But here's the beauty of a tax lien certificate. The property owner benefits right away because they don't get thrown out of the property. Now, that doesn't work in the tax deed states. So they're in a benevolent state if you bought tax lien certificates in South Carolina. All right, now all of those certificates do not always get sold, but when you buy one, it starts a clock ticking. Meanwhile, that person is basically locked into the house. They can stay in that house as long as someone buys the certificate. But on the last day, which in this state, it's 1 year, they're going to lose that house to whoever bought that certificate. All right, that means the ownership is going to change. So if you raise your hand, you buy a certificate, all right, how much money are you going to make? Well, in this state, meaning South Carolina, in the first 3 months, you're going to earn 3%. The next quarter, you're going to earn 6%. Now, these aren't cumulative, it's a total. All right, so just look at the total. So in total, you can earn 12%. Those are not cumulative, they're just one number, okay? So the most you're going to make in South Carolina is 12%. But they're very good in South Carolina because if the property owner doesn't pay, they're going to send you a deed in the mail. Now, I've never heard of that happen, but here I am telling you, you got to know the rules. And the rules are different in every state. In this state, if they don't pay, sometime between the 12th and the 15th month, they're going to send you a deed to that property. What could be simpler than that? Now, is that a good place to go by? Every state's a good place to go by. You just have to know the rules. Do I know all the rules? Absolutely not. You can find them on the county website. You can find them in the statutes for the state. That's the rule books. You could also find them on the state site. They're going to give you all those rules. Nobody's trying to hide it. The legislature has made it so everybody can know what the rules are. So if you know what the rules are, how would you like to buy a property? They didn't pay you, and then they just sell you a deed to the property. Well, I don't know if it's ever going to get any better than that. All right, so what's the treasurer's job? The treasurer's job is to bring in the money so the county officials can spend it to pay the police, the fire department, the school teachers, the courts, the judges. All those things have to be paid. And let's not forget the county employees. They all want to be paid. So they're going to have a public auction. It might be online. It might be at the county courthouse on the courthouse steps. I don't know, but you can go and look all this up. Every bit of this information is part of the rules, okay? I don't establish the rules. The legislature does all that. All right, this is a good state to buy, as all states are, and the counties are good too. Why? Because if the taxpayer defaults, you can earn 12%. What's wrong with 12% in a 1% market? Now, I know in Texas, you can earn 25%. In Georgia, you can earn 20%. Every state has its own rules. The point is, you need to understand that the majority of these property owners are going to come forward and they're going to pay their tax, and you're going to make a nice, safe, secure investment. All right, now if you're one of those people that waited too long to get started on investing, you don't think your future's too bright, this is a way you can get started all over again for a small amount of money and start making giant returns. Now, 12% interest in a 1% market is an outrageous interest rate. And if you can make 12% on your money, just start figuring out how quick you're going to start to be wealthy. So you can buy in other states if you want to, but that's how South Carolina works. And I'm going to tell you, after those people have had multiple default notices, they're more than likely going to come and pay. 97% of all the taxpayers come in and pay, so you're going to get your money back. That means it's safe and secure. You invested with the county, you're going to get your money back from the county. Probably not going to get any safer than that. If they don't pay you, you're going to get the property. I don't make the rules. The treasurer and the legislature and the board of supervisors make all the rules. All right, so now, what's really going on here? Well, now you're going to get the biggest gift of all. And the biggest gift is this. You can see that eraser is going to wipe out the mortgage. Well, that's what the county treasurer is allowed to do. At the auction, when the auction takes place, they're allowed to wipe out the mortgage. In other words, you're going to buy that property for the back taxes, and they're going to wipe out the mortgage, and you're going to end up with a property that's basically free of a mortgage or a trust deed, and you're going to have only paid the back taxes. It doesn't get any better than that. All right. Now, the property owner forfeited the property because they didn't pay. I didn't make that rule. The country made that rule. The state legislature enforces it. Everybody pays property tax. If you don't pay the property tax, you lose your right of ownership, okay? All right. Now, if the property owner doesn't pay tax and the county doesn't have the tax certificate sold, they're going to do something with that property. What they do is they put it on a forfeited lands commission list. First, they try to sell it at a couple of different auctions. So these are unsold properties. They might not be glamorous, but they're unsold. Now, those properties, there's no bidding. You just go in and say what you want to pay for it, and if nobody else makes a bid, you're going to be able to buy that. So the important point to understand here is that the rules are different in every state. All right, now when I say they're different, just listen to this example. All right, so I have a client. He goes to the Forfeited Lands Commission, finds a single-family home. Wow, pretty good. All right, he makes an offer. Nobody else makes an offer. He buys a property, a single-family home, with no mortgage on it for $3,000. He buys a property, a single-family home, for $3,000. What does he do? Has a couple of guys fix it up for him. He puts it out and he rents it. He rented it for 10 years at $600 a month. He paid $3,000. He rented it for $600 a month. In 6 months, he had all his money back. So he just kept making money. Finally, they built a new subdivision right next door. I don't know. Luck happens to some people. It sure happened to him. So a broker offered him $100,000. He paid $3,000, offered him $100,000. Do you think he sold it? You better believe he did. So in 10 years, he collected $70,000, and now on top of that, he gets $100,000. He had an investment of $3,000. Folks, every deal isn't like that, but you only have to make one of those in your life. So if you're just getting started, think about what I just said. Now, the beauty of what this guy did is he did all of that in his IRA, his individual retirement plan. He started using his Roth IRA money. That means when he got all that money in, he had to pay no taxes. All right, so I've been talking about what is South Carolina. It's a tax lien state, but wouldn't you know, they always have some new rule, right? Well, they have a rule in South Carolina that one county, one lowly county, way over there by the ocean, guess what? They sell tax deeds in that county. Tax deeds are different than tax liens. All right, so this will just show you some ideas of how many things are being sold in that county. But that one county, read right in the middle of that slide that you're seeing, Horry County, redeemable tax deeds. That's much different than a tax lien. So you're going to have to go out and do your homework, aren't you? Because that's different than a tax lien. All right, so my name is Ted Thomas. I'm out of time, but I do want to say that I've given you a free gift, and it's right below me, and you want to take advantage of that as soon as I finish. I'll see you in the next video.